action.
Hi, I'm Saverio R. Pellicano. Unless you've been living under a rock, you've probably heard that home prices in the Bay Area are down to levels not seen for years. However, rents have gone up, so you might be seriously considering stepping into the American dream of owning a home of your own. But unless your great Aunt Matilda left you a wad of cash, you'll probably have to finance that dream with a home mortgage loan. But you ask, how do you determine if you are being offered a loan at a reasonable rate? The simple answer is to make sure you shop for rates by comparing apples to apples. First, understand that the information that you get from the mainstream media, to put it bluntly, is of no practical use to you if you're searching for a reasonably priced mortgage. And here's why. Because interest rates change daily with the financial markets. And it's not at all uncommon for rates to change 2 to 3 times per day during periods of market volatility. Furthermore, these ads and news articles and even the more current internet sites rarely give you a true picture of rates because they leave out important information that's relevant to how rates should be quoted to you. Mortgage rates are really not a one-size-fits-all situation. You should not consider any rate valid unless, at the very least, you are told A, if there are any loan points being charged for the quoted rate. Each loan point is 1% of the loan amount being financed and will increase your upfront cost to get that loan. However, understand that the higher the points, the lower your interest rate will be. B, how long will the rate quote last? How long is it good for? This is called a rate lock period. Lenders charge lower rates for shorter lock periods and higher rates for longer lock commitments. Common lock periods are 15, 30, 45, and 60 days. And if you're buying a home, then you ought to compare rates with at least a 30-day lock, and longer if you're considering buying one of the problematic bank-owned foreclosures. Other important factors that could affect your interest rate are whether the purpose of the loan is to purchase a home or are you refinancing your existing home. Another factor is whether the home that will secure the loan will be your owner-occupied primary residence, or is it a rental, a non-owner-occupied investment property that you're refinancing. Rates for owner-occupied loans are usually 1/4 to 0.5% lower than investment properties. A third additional factor affecting rates is the amount of the loan that you want. There are conforming threshold loan amount limits. Loans at or below the threshold limit are called conforming loans. Loans over the threshold limit are called jumbo loans, and these generally have a higher interest rate. And finally, rates will vary depending on your credit score. So it would be best to know your score in advance. In summary, the concept of shopping for mortgage interest rates boils down to comparing apples and apples. When comparing the offerings from different lenders, ask those lenders to quote you their rates based on the same parameters. For example, you might ask them to quote you rates only at 0 points and only with a 30-day lock. Also, make sure the rate is quoted with consideration to whether you are buying a home or refinancing a home, whether it's for an owner-occupied primary residence or an investment property. Also let them know whether it's a conforming or a jumbo loan amount. And make sure that it's based on your given credit score. If you have any questions or would like some help in comparing loans, just give me a call at 925-998-4360. Or just click on my email link on this page to send me a message. Well, that's it for now. I hope you found this useful, and thanks for watching.